What's up, guys? This is Joe, otherwise known as Catching BTC on Twitter. This is Bitcoin Watch number 14, where I do technical and fundamental analysis on Bitcoin's price action, as well as set some price targets and expectations for the future. So good morning, everyone. Hope you're all having a nice day so far. We're just going to go through a few different things on Bitcoin and what's sort of been happening over the past few days. I'm going to do you know, a similar type of market that I've traded, which is gold, which is very similar to Bitcoin, and something that I found very similar to the market situation right now, because previous to this, I haven't really seen a Bitcoin retracement act in this sort of way. So I'm just going to go back and go into another market and just show another example of what actually might be going on, and that's gold. So we're going to be comparing gold and Bitcoin. But we're just going to start with looking in on the closer time frames, just to have a look at what I was going on. I had briefly went over this on Friday in a little essay in regards to what's sort of been happening here, because we had this, we're pretty much just stuck in a range right now, and I don't trade ranges, so I'm not going to be trading this market anymore. I was trading the fact that we made a lower high here, and I was looking for bullish continuation of the 618 retracement, but we never got it. It was we went up and down to the same place within the space of about 2 weeks. So in 2 weeks, we'd pretty much just done nothing. You still haven't really done anything, but now we have another confirmed lower high on the higher time frames, which is something that you kind of want to see when we're dipping and using the same liquidity pool for market turning points. So as you can see here, we've pretty much just been using the same biased liquidity for the past, since July, essentially early July. So we're now coming into the end of August. So within 2 months, we've been using the same buy side liquidity, and we're yet to break through it, and we've made 2 confirmed lower highs on the higher time frames, on the hourly time frames, which is a good sign. But I'm going to go over again, when I compare gold and Bitcoin, as to why we might have actually seen the bottom of this retracement, but I'm also going to say why we might not have, and what we're kind of looking for to prove that we may have not seen the bottom of this retracement just yet, and what sort of things to look for. So something when you trade gold, I'm not going to go into the comparison now, but this is what I mentioned in my little article on Friday. But when you trade gold, there's a very it loves to retrace to the 786 in the bearish direction. So when it's in a bullish market, but it's having a bearish retracement, it loves to go to this between the 618 and the 786. So I would never ever take a position in gold unless it was trading, unless I had technical factors that lined up between the 618 and the 786 of a significant higher time frame retracement. So in this example, I wouldn't have taken the short here at the 618. I would have taken it in the zone of the 618 to the 786. And usually my technicals would land in the middle, and then my stop would be midway above the 786. So if I'd stuck to that sort of technical analysis, I wouldn't have been stopped out in any of these short trades, which I have been stopped out of over the past few months. And this is why you just don't trade ranges. Obviously, I wasn't, I took the long here and got out here, and I was out of the position pretty quickly. I didn't take the long again here because I never like taking the same trade twice. And then I ended up taking, I believe it was a long on this retracement, and I got stopped out. And that was sort of when it hinted to me that I think we might be going into a range, and I didn't trade this whole sort of way down. I got in a long position here, was out by here, and then my last Bitcoin trade, which I got stopped out on, was the bullish continuation of this move up here, because it was so strong for me. I hadn't seen that sort of strength in the market since really pre-June when we come out from the bottom. So I was like, okay, this is strong enough for me to be happy to take a 382 long position. I was looking at 618 as well, but when we sort of sliced straight through my 382 without much buy support, I didn't take this 618 position, and nor was I actually at my computer when it happened. So I got stopped out of that 382 bullish continuation trade, and that sort of confirmed that we are in a range. And I think now that most people understand that we're in a range, we're going to see this market sort of start to turn around. But I'm not going to go to that yet. I'm just going to go over and see what I'm looking for now. So we've had these are the three 786s of the large retracement. So this was the first one, the 786 here. This is the 786 of this move down, which is here. We topped out there again. So if we take the fib here, the 786 is here. So really what I'm looking for now to see a confirmed breakout of this range, honestly, would be a, sorry guys, I'm not sure what I just did there, would be a, if I saw a break of this 786 as well as a strong move above this trend line to then make possibly a retracement at the high here to come down and make this support. You sort of see this 236 or 382 retracement after topping out at the high. But if we sell off at the 786, or even, if we're as bearish as a lot of people think we are, which I don't think we are, if once people spot this pattern, they'll be wanting to come in to this short position at the 618, wanting to front run the shorters at 786, and we might not get there. So, really I'm looking now if we're in a continued bearish range, or at least a bear market where we'll see a bear retracement where we'll see lower lows, so we'll break these lows here, then I'd want to see a rejection at the 786 to the 618 zone. But if we manage to break above this, I'd be happy to take the bullish continuation trade again. But if I'm honest, I'm not going to touch this market until I see the reaction from at least this 786 zone, or at least see a break above it. I'm not going to take any longs on the retracements here. I'm only taking anything until we've broken this high. I won't be touching Bitcoin, if I'm honest with you, because we are stuck in a range, and I don't trade ranges. I think this is the lowest probability markets. You want to be taking those bullish trend continuation trades because they're the easiest and the most simple and high probability trades. And I'm pretty upset with myself for getting stopped out on this trade here. So I'm just going to lay low on the Bitcoin market until I see a break at this high. But that was a quick overview of what I'm looking for locally to decide my bias on the market. But now I'm just going to cover that gold Bitcoin comparison that was going on at the start of this video. So kind of here, I've set two charts up here, and I'm just going to, we're not going to look at gold just yet, but I'm going to look at this chart that I've set up here. So when we topped out at 14,000, I was looking for this 382 to offer the liquidity we needed to move back up, and I took the long trade here. Again, I've gone over 100 times. But we've been using the same liquidity for market turning points, the same buyer's liquidity in order for this retracement to be over for the past 2 months. And usually you don't tend to see this, but I have traded another market there recently that literally looks identical to it. And, funnily enough, it's another store of value, which is gold. And so I'm just I'm gonna get the chart in now, and you guys can have a look and sort of see. I'm sure you'll see it straight off the bat of how similar it looks. So I'll put it like this so you can sort of see it a bit better. I'll bring this chart down. So you have a look here in gold. So we had this big spike up from the lows, 1,160 in August, and we had this really strong contained bullish move, almost parabolic in a way. We've had barely any retracement coming up here, and the same for Bitcoin here. The lows for the year at 3,100, the strong move up, barely any move up. It was parabolic, and then once it ended, it retraced to the 382, and it's the same here. Once it ended, it retraced to the 382, and it was using the 382 buy side liquidity for that bullish continuation traders on the high time frames to go balls deep long and to continue the trend up. And it used it for its initial two dips, which is what we can see here. It used the 382 here, and then it used the 382 here. You can see, even though it kind of looks like a sustained bear thing, you just mark the turning point here that comes all the way back up and then comes down again. So we had these two tests of 382 buy side liquidity here. Same thing here, and then we see this break below the 382 to dip into the deeper pockets at the 382. So the deeper buyer side liquidity, not quite the 0.5 Fibonacci as we see in both markets here. We don't see the 0.5 test and we don't see the 0.5 test here. But what we do see here is a trend line resistance from the past few months offering that support, and it's the same here. Trend line support from really going back to March, late March, early April, coming into play here. A really, really strong wick off of it. And sort of the same here. I'll go over the moving averages in a second. I'm going to take them off for now. But again, so you can just see how similar it looks in market structure, the fractal, the sort of the bear fractal of that sustained bullish trend. And I really like this because I hadn't actually really looked at it before or thought about it until we made this lower high here, because I remember trading the lower high here, and I was actually I never went. I think I was short. I was short here, looking to go long at about 12:30, but we never got there. Got stopped out of that short trade very quickly. It was a very small loss, and then I got on the ride for long and took it all the way up here. So, I'm looking for the same thing now in this market. I'm looking for this. We've got this trend rejection in the bull direction, a really strong wick here, and we had the same thing here. And it was a very quick move up. So, I don't think it's going to be a quick move up, but I definitely think once we break this 11K 786 resistance on the market, which is also the 236 on the macro timeframes, I really think it's going to be a quick journey up to the highs again. And once I see that break, I'd probably buy some more spot Bitcoin over for the next couple of months, coming into the end of Christmas, December. And the way stocks are looking, they are looking pretty toppy, if not rangy. So I think money might start flowing into store of values and away from the stock markets whilst stocks change hands, whilst we range until we really find a direction, whether it's up or down. But if I throw in these moving averages, they're not the same, and they're never going to be the same, because gold has been ranging for the past 10 years. Whilst the stock market's been doing its thing. So the moving average is never going to be the same, but they do show a similar story in a way. If we see here, the gold's already been using the 200 moving average to confirm its direction, whereas Bitcoin tends to use the close to 100 moving average really to choose a direction and to continue its trend. So we look here, it's calmed down here. It's got to the 100 moving average, not quite to the 200 moving average. It's had a couple of tests, and then it gets this eventual test of the 200 moving average to really fill its buy side trend traders up for another move up. And it's the same thing here, really. We've got these two tests really close to 100 moving average, but not quite filling people that trade the moving averages much. So when we got this confirmed tested 100 moving average, for me, it's quite similar in the way that the 200 moving average offers institutional market trend changes. Like when you go to do any courses at an institutional trading firm, or you talk to anyone, 200 moving average for them is what, it's, the 50 and the 200 is what they trade. They don't really trade other moving averages, they just use them for confirmation. So, for such an institutional market, I think that makes sense. But then when you come into a smaller market cap product like Bitcoin, this 100 moving average going back, to the 2017 bull market, you can see here, this is really what we see as confirmation for the trend continuation. So now that we've got a nice touch and go, this 100 moving average, and we've made two confirmed lower highs now at the 382. For me, I'd be happy to say that, just comparing these two markets, that we might actually have had the end of this retracement, and that the market's going to trend up now. But I'm not going to be trading that until I see a break of this 786. So it's just something to think about. You know, it's interesting to compare markets, and especially when they're so similar, gold and Bitcoin. You know, Bitcoin's just an infant gold, um, but it's interesting to see it play out in institutional markets as well, and a very similar market situation. And so that was just a very quick overview. You know, my expectations for the later months, I kind of did on this chart. I'm not going to go into detail at all because I've done that in other videos. It's really I'm looking for this 16,000 to 17,000 coming into the end of the year, and then of course the highs here at about I'm looking for more for 21,000, 20,000. You know, if I just get this is in the Bitcoin watch channel. You know, just using market turning point analysis, liquidity pool analysis, you can see that really the strongest next level is 16,000 to 17,000. So that's my end of year target. I'm looking to exit some spot Bitcoin there. I exited spot Bitcoin at about 11,800, and then I'm looking to take another chunk here, and then coming into, you know, once we see how the market reacts to here, I'll decide when I'm going to fill up on more. But really, you know, that's my end of year target. I'm looking for $17,000. You know, all this analysis is in my old videos as well as everything else. But you know, if I just show you quickly, get some fib levels up. This 17,000 zone is the 786 for the bear retracement, and it's also, you know, it's such clean Fibonacci extension here. You know, if you really want me to go more in depth here on Fibonacci extensions, there's even more I can include, which, you know, show this being the next sort of level of support for the market. Again, guys, look at that. It's just so clean. There's 3 Fibonacci extensions as well as this retracement. I really like the 16,000, 17,000 zone as my next sort of chunk of take profit. And that was just a quick video, guys. I hope you like that. Just something a bit different from the usual videos. But I hope you have a nice day and you enjoy that, and I'll see you in the next one.